Let's start with the Asian markets, where the big story, as we said, is another steep decline for stocks in mainland China. Let's get a closer look at the big losses being racked up on China's benchmark index. We go now to Kathy Yang in Hong Kong.
And Scarlett, it took a plunge of over 4% in Shanghai to get the alarm bells ringing here in Asia, because it was that precise moment when mainland China's market stacked up a 20% decline from the high that it reached earlier this month. And that magnitude of a drop officially turned the Shanghai Composite Index to a so-called bear market. Now, some investment managers describing it irrational selling that has shattered market confidence. Now, that statement coming from the Deputy Chief Investment Officer at KBC Gold State Fund, Larry Wan in Shanghai. Well, the bears are shaking their heads now, saying, "Don't say we didn't warn you." Andy Shea, the former Asian chief economist of Morgan Stanley, had earlier warned we've seen the peak of this market cycle and that the current correction reflects the government's tighter grip on lending. CA correctly predicted in April 2007 that China's stocks would tumble. Now, soon after the Shanghai Composite Index plunged, the markets across the region followed suit. And like dominoes, Hong Kong's Hang Seng Index closed down over 1.7%, and the Nikkei 225 in Japan ended over 0.5% lower. Investors now looking for that healthy pullback, waiting for that moment that they could find better entry levels.